Good afternoon, everyone. Happy Friday. Hope you've had a great week so far. The ASX 200 today managed to just limp over the line with a small gain. The ASX 200 up about 15.5 points or a fifth of 1% to 8,764. Now, it's a second gain in 7 days. So even though it was a modest improvement, we'll take it. But over the course of the week, we still fell by about 0.75%. It has been quite a busy week. A lot has happened. There's been a bit of a tech sell-off of sorts globally, particularly those with larger chip sectors. They did quite poorly. Last night we had an uninspired lead coming through from Wall Street as well. That had a bit to do with stocks like Apple, which fell by around 6%. It's decided to raise prices on MacBooks and iPads. It's basically passing on the higher costs for things like chips and memory chips as well onto consumers. That market didn't like that so much. Over the course of the week, we also had economic data locally on both jobs and inflation on Wednesday and Thursday. Mixed set of numbers, didn't really move the needle so much as far as what could be next as far as interest rates go. So the market still thinks that rates are probably on hold for the rest of the year. Of course, it's going to be data dependent, and the data that flows through in the months ahead on things like inflation and jobs will be important, but also how things unfold globally as well. At the moment, the market thinks there's roughly a 20% chance that they'll raise rates next time they meet, which is in August. Now, last night we also had some data on inflation in the United States that was handed down. We actually saw, this is a favored measure by the Federal Reserve, by the way, but it saw prices actually top 4% for the first time in 3 years. But importantly, the data actually came through a little lower than what the market had expected. So this had a bit of an impact on currencies. It saw the US dollar softening a bit, and in turn, it was quite supportive for commodities. So that goes some way to explain some of the improvements we had today on the market. The materials were up 0.8%. The energy sector was up 0.5%. The first improvement for either of those sectors this week. Putting that into context, though, it's been a very rough performance for many of these stocks. So the mining sector as a group actually fell by 10% over the prior 6 days. Gold miners did even worse than that. They've actually fallen 10% in just 3 days as the price of the precious metal fell back, but that's rebounded in the past day. And also energy stocks since Monday, they basically declined by 5%. So a little bit of a bounce back today as most commodities, including oil and gas, managed to lift. Outside of that, we had improvements from defensive utilities and consumer staples, industrials, consumer discretionary, and the worst performers were tech and healthcare. Healthcare has had basically a 5% improvement over the past 2 days, so keep that in mind when you look at the declines. Now, as far as the individual winners of the day, this list was very much dominated by mining and energy stocks. Basically, all 20 stocks on the ASX 200 that stood out were all in that mining and energy, mining or energy sectors. So Kingsgate was one of the best. It rose about 4.4%. This is a gold miner. Another gold miner, Ramelius, was up 3.8%, and Beach Energy was up 1.8%. Although that's the first lift in 12 days for the energy stock. And also Xero, the accounting software company, up about 1.8% today, but it's fallen still for 3 consecutive weeks. There were plenty of underperformers on the market. One of them was Judo Capital, 3.8% lower today, but of course yesterday it fell 40%. And this was after the business-focused lender basically announced a profit downgrade and blamed it on 3 bad loans in particular. And that was a bit of a weight on other financials yesterday. 4D Medical down around 9%. Now, it announced that one of its products has been approved by the Therapeutic Goods Administration, which enables commercial deployment across Australia. Now, this is a particular imaging agent is used for chest scans. Already has clearance for the sale of this in the US, the EU, UK, Canada, and New Zealand as well. So it adds Australia to the mix. Keep in mind that, yes, the shares fell back today, but it's up 16-fold on the market in 12 months. Worley, 2.3% lower. This is an engineering group that fell almost 10% yesterday. Now, this is in response to a one-page update by the group where it basically warned that the Middle East conflict is having a bigger impact than expected on its bottom line. So back on the 20th of April, it essentially said that earnings are probably going to be $30 to $40 million lower than previously thought. Today it said it could be up to $60 million as far as the hit goes. Now, if you're wondering why the Middle East is important for Worley, it's one of its biggest markets. So it actually makes much more in the Middle East than it does here in Australia. And Guzman y Gomez down around 2%. Aware Super has sold down some of its stock in the group. Just a reminder that last month, Guzman basically announced that it's leaving the United States. It's exiting that market. It's been losing a lot of money there. It said it's going to spend at least 30 million or so US on getting out of the United States, and it's found it tough to compete with the likes of Chipotle, which has around 4,000 stores. Now, if we look forward from here tonight, relatively quiet as far as what is scheduled in the United States or Europe. There will be an update on consumer confidence that will get a bit of attention. But turning our attention to next week, there's going to be a lot to watch. One of the key things, of course, will be how things are unfolding in those conversations and peace talks between the United States and Iran. So simply put, if they're closer to signing a deal, could be well received by markets. On the flip side, if tempers are flaring, if the ceasefire is being tested, that could certainly see oil prices lift. It could push markets broadly lower. Big week for dividend payments as well. We're going to have about $7 billion paid out from 3 banks, ANZ, NAB and Macquarie. So could be a little liquidity injection into markets. We also have a holiday shortened week in the United States. So the US market will be shut next Friday for the Independence Day holiday. And that means some of the data that typically is out on a Friday will be out a day earlier. Now, currency-wise, the Aussie dollar sits at around 68.9 US cents. It also softened against the euro and the Japanese yen. Hope you've had a great week, everyone. Enjoy the weekend, and we'll see you on Monday.